So this is one of my favorite subjects. We're going to be talking about ISAs and the amount of enthusiasm that individuals, financial advisors and accountants will go into about ISAs. They're great investment opportunities for sure, but there are things that you need to be aware about. They are not the only thing that you can do. So please be aware of some of the things I'm going to highlight to you before you make any investment decisions for ISA accounts. So beware of hidden fees, risks eating away at your ISA gains. Just because they are tax-free does not mean at all that you are going to get a net positive result. Let me do that again. Just because they're tax-free does not mean you are going to get a net positive result. Let's go into this in terms of ISA problems that you might face. First of all, there's a £20,000 limit. £20,000 to most of us will be a lot of money to put into an ISA. But what if you've got more? What if you've got an inheritance coming through? What do you do then? Well, you are limited. So ISAs will not be the be all and end all. You need to think about other types of investments. If you make extra contributions to your ISA, there will be charges against your investments. And we'll highlight one of those later on. There is a potential whereby you take money out of an ISA account, such as the lifetime ISA account, which is used to buying home below £450,000 or for retirement. The problem is with this is if you take the money out thinking it's a normal ISA account, hey, you are now going to be faced with a 25% tax charge, which is equivalent to a 6.25% erosion of your investment. Management fees. We need to think about this because just because it's tax-free investing in an ISA does not mean it's actually free. You have to pay management fees for the investments you make, especially if someone's going to be diversifying your investments. Indeed, there could be even transaction costs you may not be aware of, eroding your investments time and time again. Please note as well that these management fees will apply irrespective of if your investment goes up or if they go down. Now we also need to look at inflation. I'm looking at 2023. I appreciate out of date, but it does show the significance of inflation versus the growth of ISA accounts. In 2023, the inflation CPI was 7.3% versus a 2 to 3% of your ISA on average, which basically means there was an erosion. Add that to your management fees, and where is your investments headed? There are no tax relief for contributions into an ISA, unlike other types of investments. Now, if you want to make some investments and you want to do that in a tax-friendly environment and structures, feel free to use that growth QR code to download that ebook. We want to help you build your wealth without the taxation. If you are looking for more succession planning, inheritance tax planning, maybe the second ebook would be more suitable. Either way, you could download both for free. Use the QR codes and the links will be in the description box below. So let's have a look at some of the solutions. One thing I would say is diversify. Yes, you may have an ISA, but you've got a limit to 20,000. If you want to put more money in, you may want to look elsewhere, such as pensions, such as stocks and shares that you do outside of that inside a family investment company. Select low fee platforms. You may be using a high fee structured platform right now, but why not look around and see if you can get a better rate. Regularly review performance of your investments. If your investments constantly goes below inflation, then you may want to do something about that. You need to look at the risks associated with any decisions that you of course make. Focus on net tax return on investment, not just tax-free. Just because it's tax-free, like I say, into an ISA account doesn't mean it's going to really do you well. You might want to put it into a different structure that gets you a better return on investment, even though there are tax implications. Use pensions and family investment companies to make investments instead of an ISA account. So an ISA is just one facet of the types of investments you can make. Pensions is another, which gets tax relief from the pension contributions that you make, and then again, any growth in that pension will be tax-free. Family investment companies, you don't get any tax relief on setting up a company, but some investments can be tax-free inside that limited company. And finally, I would always say work with us to review your financial performance and work with an IFA that can help you decide on what type of investments are right for you. Some of the things that I want to share with you are the investment woes. Here's an example, classic example in fact, is the £20,000 that's been held in an ISA at 2%. Inflation is 7.3%. Overall, the investment is eroding over time. Something needs to happen and change to stop that. Change investments is an alternative to that, where you've got £20,000 in stocks and ISAs. Net growth is 6%. After 0.5% fees, which is less than potentially what they was paying before. Fees warning, just echoing that point, investor assumes all ISAs gains are profit. Overlooks the 1.5% annual fees and ends up with a poor net return. The wealth manager, IFA, are always good to be happy because you're investing with them. Do they have a duty of care? Yes, of course. But if you read the newspapers and the online news results, you will see that there are many wealth managers who aren't necessarily looking out for your best interests. £20,000 warning. Again, 45-year-old crypto enthusiast exceeds their ISA allowance, placing £30,000 into a taxable account. Violates courses. 15% loss, 4,500 plus 45% income tax on any recoveries. Basically means that they didn't look at the small print, didn't understand what the ISA account is all about, and then getting taxed on top of that. A huge mistake that could have easily been avoided working with us. Hopefully that's been useful to understand the limitations of ISA accounts. My name is Simon Meshevich from Optimise Accountants. We are UK investment tax specialists. There's our website. Feel free to book a 10-minute discovery call using that QR code or the link below to see how we can help you.